Barloworld has reported a sharp fall in profits, with annual headline earnings per share down 21%. That's as revenue slipped 10%. Now, the downturn was driven largely by the collapse of its Russian equipment business amid the ongoing Russia-Ukraine conflict, along with weaker demand from some Southern African markets. Post-year-end, a consortium led by CEO Dominic Suela, including Gulf Falcon and Encha, agreed to buy out Barloworld, a move that will result in the company being delisted from the JSE. WeBuyCars has had to cut selling prices as competition intensifies in South Africa's car market. That's thanks to a surge in low-cost Chinese brands like GWM and Omoda. The used car retailer says the shift in consumer buying patterns has created margin pressure. This has forced it to adjust prices to maintain liquidity and keep inventory moving. But despite that challenges, the company has reported a 13% rise in revenue and a 15% jump in core headline earnings for the year to September. WeBuyCars has also announced the creation of a deputy CEO role. It's appointed Vinod Bukes to the position. He's currently the firm's chief digital officer. Astral Foods has turned a weak first half into a strong second half and delivered a solid full-year performance. The poultry producer struggled with lower selling prices and higher input costs in the first 6 months of its financial year, but it managed to turn this around thanks to increased broiler slaughter volumes and sales, as well as a recovery in selling price realizations. And so for the full year, revenue rose 10% and profit ticked up 16%. The strong results have given Astral room to reward shareholders. A total dividend of 11 Rand has been declared. That's more than double what was paid out last year. Serious Real Estate has reported a 57% jump in profit after tax for the 6 months to the end of September. The owner of branded business and industrial parks in Germany and the UK says the performance was supported by robust rental growth and a series of acquisitions during the period. Total rent roll increased 15%, while funds from operations rose nearly 7%. The company has declared its 24th consecutive increase dividend, up 4% to just over 3 € per share. Sirius says it remains well positioned for further expansion, backed by a strong balance sheet and continued demand for flexible business space. 91 has reported strong interim results at its halfway mark. The firm's assets under management rose 19%, while net inflows were at £4.3 billion, boosted by the June acquisition of Sanlam UK. Adjusted operating profit grew 12%, with earnings per share up 15%. The company has declared a 6p interim dividend per share, which is an 11% increase on last year. Commenting on the results, CEO Hendrik du Toit highlighted the firm's strong positioning for growth in emerging markets, noting that the partnership with Sanlam and technology investments are already delivering results. Naspers says it's expecting higher earnings for the first half of its financial year. That's thanks to stronger revenue and profitability across its e-commerce operations and equity investments, particularly Tencent. According to a trading update, core headline earnings per share from continuing operations are set to rise between 21 and 28%, while overall headline earnings will increase by up to 13%. Results from Prosus, which make up most of Naspers' earnings, are expected to show strong growth. The firm's core headline earnings per share or per ordinary share for continuing operations are expected to increase by at least 20%. Prosus and Naspers will open their books on the 24th of November. MTN has delivered a strong third quarter, driven by standout performances in Nigeria and Ghana. The mobile operator says it has now surpassed 300 million subscribers across its markets, with active data users rising 9% and mobile money customers up more than 5%. Group service revenue grew almost 26%, boosted by a 40% surge in data revenue and a 36% jump in fintech revenue, with the value of fintech transactions climbing 38% to over $340 billion. MTN says the group's focus is now on reviving prepaid services in South Africa while sustaining the strong momentum it has in Nigeria and Ghana. Jubilee has secured a key approval for the sale of its South African chrome and platinum group metals operations. The Competition Commission has issued an unconditional merger clearance for the assets to be sold to One Chrome. Approval from the South African Reserve Bank is still required, and the final condition is an audit process which is due by the end of the month. The sale is expected to be completed by the end of this year, and Jubilee says this will allow the firm to shift its focus solely to its Zambian copper projects while retaining an investment in the Chart Platinum project in South Africa. And foreign investors are surging back into South African markets. Data from the JSE shows almost 5 trillion rands has been added to total market value this year. This has been driven by renewed confidence in structural reforms. The FTSE JSE Top 40 has jumped 55% in dollar terms, far outperforming major global indices. While the rand has strengthened and South Africa has seen more than 129 billion rands in net bond inflows. JSE CEO Leila Fourie says investors are pricing in fiscal repair and stronger institutions.